If you look at this chart, you can clearly see the stock is almost in an accumulation zone, and right now it is trading at 340, but its IPO price was 381. If you add value to it, you can clearly see the stock price has been kept at the same level and it is being accumulated by big players. If you go and look at investors, you can clearly see the promoters haven't sold anything from past many quarters, and if there is a gradual increase in FIS holdings. So if you look at its P&L statement, there is a declaration of highest ever net profit and highest ever EPS growth. This is not an highest ever EPS growth because here the equity capital is not adjusted. Here it was 314, 114, here it is 130. So, hello everyone. Today we'll be discussing about a stock called Adani Wilmar, that is AWL. So firstly, we will look into its technical chart patterns, and then we will go to its fundamentals, and we will see that whether the targets that we are discussing in our technical chart patterns have any fundamental support or not. So then we will also look into what management is exactly saying about this particular company, and how after that we will combine all of them just to come out with a conclusion. So initially, if we just look into Adani Wilmar business. So primarily it is into edible oil business. So most of its revenue you can clearly see comes from edible oil itself. That is 75% of its revenue comes from edible oil. So previously it was 84% in 2022. Now in Q1 FY25 it is almost 75%. But this reduction on the dependency of one single particular segment is also a positive for a company. You can also see now if we look at its technical chart pattern. Initially, you can see in weekly chart you can clearly see there was a boom after its listing. It was almost 200% gains, and then after that, because of some market correction as well as business headwinds and this particular company stock price have crashed from this level to this level, right? This level. So the reason mainly for crashing of stock price in this particular level, like this, is because of contraction in earnings as well as sales. So you can clearly see the contraction in earnings and sales over here. So we will look into all these things while we are while we will be discussing the fundamentals of this particular company. Okay. Now coming to technicals, let us go to one-day chart pattern and let us close this quarterly results. So the main reason for this particular company's share price to fall is because of headwinds in particular business and as well as downtrend in overall market, negative weakness in overall market is what we can say. Okay. Firstly, if we look into its technicals, so previously at this particular time horizon, say when from Jan 23 to almost May 23, it tried to form some. There was an accumulation pattern over here. You can clearly see this one. We can also conclude that it was a clean WF pattern, and it failed to broke and give a breakout from this level. Right, so the reason is this, so whatever we have discussed right now, contraction in earnings and sales price. This one from this time zone, right? If you look at it, you will see all these things happening over here. Reduce sales growth and reduce DPS growth. So, and now if we again look at its chart patterns in past 6, see from now December 23 to current levels, you can clearly see there is another clear accumulation happening here. But now the business prospects is not like how it was in this particular time zone. So now the business prospects have changed. We can clearly see that there is a clear EPS growth, and there is also a sales growth in last 2 quarters. From last 3 quarters also there is a sales growth. There is EPS growth, but if there was no sales growth. But if we consider last 2 quarters clearly, then you can see that there is a sales clearly a change in EPS. So now the business prospects are increasing, and at the same time, if you look at this chart pattern particularly, you can clearly see that prices have been kept and this same price range, and it is being accumulated. The script is clearly being accumulated. So how it can be studied like this, right? So whenever the price reaches to this support level, you can see with huge value there is a clear cut accumulation of this script. See again, the prices comes down, there is an accumulation with huge volumes. Prices comes down, accumulation with huge volumes. Again, prices comes down, price comes down to this zone, and again there is accumulation. So now again price is hovering over here. But right now, if you see, this was our last Q1 ahead of FY25, and this was a time when they announced Q2 of FY25. So, this is all about technical pattern. So, there is a clear cut accumulation. That is what we usually consider as stage 1, and then in stage 2 is growth stage. So, once it gives breakout from this horizon, this accumulation zone, we can see huge potential for this script. Okay, now we will discuss about different technical patterns and different targets that the charts are offering for us to trade in this. So initially our first target will be around 394. So in our Twitter page, we have clearly mentioned about this script exactly at this point after a baby pattern over here, right? Here is where we have mentioned. From that levels, if we see, we have a clear potential of around 20%. So that 20% I expect that to be reached within 3 months. Say in this, right? Okay, that is our first technical target. How much our first technical target is? Around 393 or 394. Then if you look at our second technical targets, then it will come out to be this, then it will come out to be this, right? So if we measure this depth and if we simply project it over here, and if we can project again, so 496 is around 496 is our second technical targets, and we will see how price action reacts then, and we will try to book our midterm technical targets pattern. So at this particular zone, you can also see there is a huge headline, but there might be a huge headline supply at this particular level. Right, as because there would be large number of buyers trapped over here on this resistance, and they would be simply waiting with patience. They would be waiting to just close their trade. I mean, there would be some inexperienced or not inexperienced actually. Those people who may not hold their emotions tight would be simply waiting for their price to reach to the even point. I mean, to the point where they have bought their stocks, right? So as soon as prices start to arrive at this zone, so we may see some supply happening over here. So I expect stock to move like this, some consolidation, then breakout, and then again some consolidation. Then it will reach to our third target. So our third target, what we are discussing right now, is this. So from this particular level to almost 800. So that is technical targets almost near to all-time high. So that will come out, that will be almost 144%, and I expect this to be achieved in next 1 to 2 years. The reason for this we will discuss it in fundamentals. So March 2026, by March 2026, I expect this to reach these levels. So this is all about technicals. The reason why we are considering 800, not 804, 800 as our target is because these numbers that is a round figure numbers of 100, 200, 400, 800. So those numbers will simply act as a good resistance. Okay, so from today, as of 5th November, we see the multiple targets potential. So first target potential is about 15% from here, and sorry, second target potential is about that we expect to reach in next 6 months, right? Is about 36%, and our third target is clearly up about 134%. So this is all about our technicals. Now, if we move into fundamentals, as we have already discussed, we can clearly see that there is a clear improvement in sales from past two quarters, right? So previously, because of sales depreciation and then because of margin contraction, we can clearly see there was a drop and even profitability got impacted. But now things have changed. Uh, Sales growth is improving, its margin is expanding, and even its net profits are also good, right? So in last two quarters, they were able to generate a sum of almost 650 crores. So if they continue with the same trend like this, then in next March 2025, not 24, March 2025, at this particular level, we can easily expect this net profits to be around 650 plus 650, that is 1300 crores. So with 1300 crores, our EPS will be, one second. Yeah, with 1600 crores, our EPS will be, sorry, 1300. So 1300 divided by 130. So, how 130? The outstanding number of shares, you can clearly see. Number of shares outstanding here is 130 crores. So, with 130 crores and with then net profits of the projected net profits of 1300 crores divided by 130 crores, you can see the EPS to be around 10. So now if you do peer comparison and look at its valuations, so you can also say that yeah, these three, this is Marico, Patanjali, and then Adan Wilmar are the market leaders, and they are almost similar in their market capitalization and even in their sales. If you compare with market cap to sales, so Adani Wilmar looks very promising, but if you look at its PE for ESPE, it is huge because of as the reasons that we have discussed. The reasons are contraction in sales, contraction in sales, and contraction in operating margin. So those are the reasons. So coming to peers, so even if you look at it in the perspective of market cap to sales, it is promising. And if you see at the PE of these three companies, right? So in solvent extraction industry. So these three companies. Okay. So even if you see and if you compare these three, P can clearly say its P average P of these three companies will be around 50. So what happens with the increasing earnings growth, that is EPS that we have discussed right now, we would get an EPS of around 10 over year. That is what we are projecting. EPS of 10 when in March 25. Yes. So in March 25, we are expecting EPS of 10. So with this EPS of 10, what happens? This PE ratio will try to fall further, but because of a market offering a P of around 40 to 50 for this particular uh, stocks with the market cap of this much. I mean this, yeah, this much. We can clearly sense there would be a P re-rating happening over here. So with P re-rating and with increased profitability, you can clearly see that this stock has all potential to reach our technical targets that we have discussed right now. So if you look at its balance sheet, again in 2023, they had a fixed assets of this much for three or three. Yeah, they had a fixed assets of this much. So with this much fixed assets, they were easily able to do a net sales of around 55,000, sorry, 55,000 crores. And right now the conditions are different. See, what are the different conditions that we are that we are able to see in its balance sheet. So right now in September 24, they have almost 4,700 crores of fixed assets. So along with that, they are also having 1,050 crores of CWIP to work, right? So combination of CWIP and 4720. So that is, sorry, 4720 plus 1059. So combination of these two, even if we expect this CWIP to be operational by March 2026, so then we can say by March 2026 they will be having a fixed assets of 5,700 crores. So you can clearly also see that by March 2026 or this spot, they would be fixed assets of 5,700 crores. So from around 5,700 minus 4377 plus, sorry, 5,700 minus 4377 is equals to minus 1,322. Right? So there would be a increase of fixed assets by almost 30% from these levels. How? So nowadays divided by 4077. So that is 29%, 2200. So almost 30%, right? So there will be an increase of 30% in the fixed assets. So if you look into its P&L statement, so if we can add 30% to this peak sales that they were able to do with the fixed assets of 4,300 crores, we will get 55,000. 0.30 equals 16,500 crores. So this plus the current revenue, I mean the previous peak revenue is 71,500 crores. So by March 2026, they were, as per the projections that we are calculating, they would easily do a sales of 71,500. So this is all about fundamentals. And now let us see that whether they would be able to generate the sales of 71,500 that we are discussing right now, right? So okay, initially if you look at this, you can clearly see they are stressing a lot on advertisement, and they are simply investing a lot on acquiring market share. So that can be seen in different that can be seen in different ways. So one way is you can clearly see that they are hiring celebrities for marketing, and then you can also see that their market share in all the segments in which they are operating is continuously increasing from from last year. March 2020 wheat flour. This, I think this would be March 2022. There is something wrong in their PPT. Okay. From year on year, we can clearly see they are increasing 5% of market share in wheat flour. In basmati rice also, they are increasing. So this will combine to be, this is a segment of FMCG. Right? So FMCG, here it has almost 3x in FMCG growth. So simply they are trying to replicate edible oil playbook. I mean the edible oil strategy that they used for acquiring major market share. So that can be simply seen over here. Yeah. So they are leadership in most of the edible oils that are consumed by Indians, right? So in soybean, if you consider they are top one, in palm oil two, and in sunflower, they're mostly used oil, and they are in a position of top three, and in groundnut, they are in top two. So that is not the only reason. Even if we just look at it, so still the edible oil market is almost 50% held by regional brands. So that being the case, if Adani Wilmar is able to attract users and build a brand around edible oil, the very strong brand. So actually, they are doing it already. You can see in roads also that wherever you go in major cities, you will see the advertisement of fortune oil being promoted. So that is one thing. So still they have a scope for expansion over here. So the same things that they have done for edible oil, that is to acquire market share and increase their potential for revenue growth. They are also trying to do same in FMCG also. Even in FMCG, they are simply growing. So this is what the management is saying about is saying. So if we again in the starting of the video that I have told that the reasons there were some reasons for contraction in sales growth. So the reasons for this sales growth contraction and the contraction in margins are clearly mentioned in their con calls. So what are the reasons? The reasons that they are providing is TRQ disparity, that is tariff rate imposed by government. So in around in 2002 and 2020, sorry, 2022 and in 23, governments have imposed a tariff duty just to increase the production of palm oil in India. So that is one of the reasons that they are providing. That is the truth. So and other thing is declining edible oil prices. We can see. So they acquired most of their raw material over this spot. Say in March, from March 2022 to around September 2022. So at this point, the raw material prices were high. So at these particular levels, that is palm oil, soy oil, and sunflower oil, they acquired the raw materials at higher prices. But now raw material prices have depreciated, reduced at these levels, right? So we at these levels, since the raw material is perishable, they cannot keep it for longer period. So why? Because there was no demand. Why there was no demand? Because of this huge food inflation, there was a reduced demand in the market. So since they were sitting with a huge inventory that they were bought at high prices, but at these levels, because of low demand, as the raw material is perishable, they cannot keep it. So what they will have to do? They will have to sell it at lower prices. So this also impacted in what margins because of selling of raw materials that and raw material that they have bought with higher prices and they are selling it over here. So that is one reason. So that is what they are telling here. I mean saying here, decline in edible oil prices, then inflation on cost. So inflation is cost in what? I mean, yeah, because of this food inflation, there was, as we have already discussed, reduction. There was a reduction in demand. They could not reduce uh, uh, prices of their products. Why? If they do that, then there are chances that they may lose market share. So just to keep their market share intact, they have kept prices same. That is what they are discussing in yeah, their PPTs. So that also impacted in market. I mean, sorry, impacted in margins. That is another reason for impact that impacted in margins. Then coming to other reasons, that is financing costs because of uh, not cheap actually, because of higher interest costs. See, you can also see they have done huge amount of capex over here and here. So this capex they have done at the time where the interest cycles were peak. So what are interest cycles? So if we see, so right now the interest cycle is speaking out almost like this in India. So they did almost their capex by raising funds at this levels. So at these levels, what happens? Their cost of borrowing would be high. So since the cost of borrowing is high, that also added to their of a reduction in OPL. Then base effect. Because of huge demand after Corona, they had a great quarter in Q4 of 2022. That is what they are saying. And there was other thing that also benefited them was soft oil due to bullishness in the market. So margins, better margins in sunflower is what they are discussing. Only that Bangladesh subsidiary is making losses, and even now it is in kind of in a negative downtrend itself because of political fluctuations that is happening over in that particular country. So this is all about Adani Wilmar. And now, see, again, the earnings is at peak, almost at peak, of all-time high, right? But the prices are drop. Future prospects of that company is good. How? In balance sheet, there is a clear-cut capex, and in P&L statement, quarterly wise, they are showing improvements in sales and improvements in margins. So thank you. Hope you will like the video. So if you have learned something and if you found the way in which we are discussing the video interesting and found it, please share it with us.